This is Coach E on Coach Talk, a HME production.
To this week's episode of Coach Talk, the premier destination for business and finance advice. And I am your host, Coach E. I am so excited. Look, we're week number 2 into our second season of the show. And I am so happy to bring on a really good friend of mine. Last week, you got to meet Miss Taylor from Exit Resource Realty. And this week, you're getting ready to meet Chris with Movement Mortgage. How's it going?
Oh, it's going great. It's good to see my sister.
Yes, absolutely. So we're going to chop it up real good today, right?
Absolutely.
So last week, we talked about down payment assistant programs. And we got into a lot of nuts and bolts with that. So this week, we're going to talk about the lending aspect of purchasing a home and using down payment and all of those other good things. So can you briefly tell the audience a little bit about who you are and who you work for?
I got you. With lending, I got you. Right. Chris Watson, I'm with Movement Mortgage. Movement Mortgage is a nationwide lender, and we have a presence locally in pretty much every state across the United States. Our mission is to love and value others in everything that we do, and that is what drew me to the company. That and just the opportunity to grow and to help people in my community and in others build wealth through home ownership.
Okay. So, a lot of our listeners are either small business owners, independent contractors, or small or entrepreneurs. And we know that's kind of like a industry that a lot of times people don't think they can buy a home or anything. And so from the lending aspect, can we talk a little bit about that genre of people and some of the hurdles that you've seen through your career in terms of getting them approved? And then we'll kind of go from there.
Absolutely. Yeah, there's some hurdles. The number one roadblock that I see with people who are self-employed is the fact that we have to rely on your tax returns in order to verify your income. Now, when it comes to getting you approved for a mortgage loan, there are 3 different aspects that we have to verify of your finances. 1 is your income, 2 is your credit, 3, your assets. Credit seems to jump off the page as like the main issue that people struggle with, but with self-employed borrowers or self-employed clients, the income is the toughest. Because we rely on your tax returns for the last 2 years, we have to look for stability in your income. And a lot of times with self-employment, since you're working around the clock, 24 hours a day, a lot of times, 7 days a week, 365 days a year, you could have inconsistencies in your income. You could have months that are up, months that are down, years that are up, years that are down. With your tax returns, we're looking at one main thing to kind of verify things. So we go through the whole tax return, but the main thing we're relying on is your net income. And that could vary by a lot of things. A lot of times you have more expenses than other times. You may have less income gross for a certain period of time, but then it comes in seasonally. So like if you have a lawn care business, for example, you may have more money in the summer than you have in the winter. And if you file your taxes in the spring, you may miss out on some of the summer income that you would have upcoming for the current year. So a lot of different variables kind of affect your ability to buy. And one of the roadblocks that I've seen, again, is the tax return aspect of getting all your affairs in order so you can prepare to buy.
Yeah, because typically as a self-employed borrower or a self-employed individual, we tend to want to write off as much as we can because it on the other end, it reduces what we have to pay in tax, right?
Your tax burden, right?
Yeah, so it allows us to keep more money in our pocket. but it's kind of dealing with a two-edged sword there, because now you're talking about, if I take, all of the deductions that are allotted to me and work in my favor, then I may not be able to buy a house.
Right.
So how do you, or are you all able to work with a let's say a small business owner that has decided to put their self on payroll? So they write themselves a payroll check, like, whether it's weekly, bi-weekly, however. How do you handle someone like that? Because now they're showing where their income is consistent through payroll, they're writing it off on their taxes.
Mm-hmm.
And so the company may zero out or take a loss, but them personally, they are showing where their income is consistent. Is that something that you can work with, and how do you all handle those kind of clients?
Yes, I mean, that idea is best. If you have someone who pays themselves through their business, especially as a W 2 employee, it makes things so much easier because W 2 income is easily verified and it takes no expenses into account. So, whatever your W 2 says you earned for the year, that's what we use for your income average. In addition to that, if you are the owner of the company, we can use the net profits from your company as well. So you're able to add your W 2 income to your net income from your company tax return or business tax return, and you've got more income at your disposal, which is super important right now because property values have skyrocketed in the past 2 or 3 years. In addition to that, so have interest rates for mortgages. So with the higher rate environment that we're in, given how volatile it is and it can change at a moment's notice, right now we seem to be increasing.
Yeah.
So you need to show as much income as possible just to make sure you can afford the house that you really want to live in.
Absolutely. And everyone, if you didn't watch last week's episode, definitely check it out, because what Chris is talking about is you are able to increase your buying power. So utilizing your W 2 income, but also your business income, whatever it nets out to be, increases how much home you can buy, especially with higher rates and higher values. So this is some good stuff. And look, if you have any questions about anything that we're discussing on the show today, shoot me an email, and I will make sure that Chris gets your questions. And then I'll also make sure that Chris leaves you all his information, his contact information, because anyone that wants to buy, now is the time. I don't care what it looks like out there with rates and values. Now is the time. And we talked about this. It's not going to get better. The cost of living is going up. It's not going to go down. That means that means your values are going to continue to increase, not go down. And so we don't know when feds are going to reduce interest, prime. And when prime is reduced, then that ultimately affects interest rates. But we don't.
Down effect.
Yeah, we don't know when they're gonna do that. We can gamble and predict all day long, but the point of the matter is, even if rates took a dive today or tomorrow, the values aren't.
Today, right now.
Right, when you get back to the office.
That's
oh
right.
God. So let's talk about this. What kind of programs does Movement offer for the self-employed to be able to purchase a home?
Well, it depends on what you're looking to accomplish. So if you are a self-employed candidate or client and you're looking to purchase a home to live in, and this is your first time buying a house, then there are definite benefits for first-time home buyers. And you are eligible for those just like someone who is a W-2 employee or someone who's on disability or Social Security who have their income that's more of a fixed thing. With you have your flexible self-employed income, you're eligible for first-time home buyer benefits as well. Now, these benefits come in a range of different options. You've got grants, you've got 100% financing options, you've got options that'll help you pay all of your down payment as well as all of your closing costs. And I'm able to connect you to the programs that help you in the best. for what it is you're looking to do and who you are. So for self-employed borrowers, we have that. If you're looking to, and I've come across this a whole lot with self-employed borrowers especially, a lot of them being entrepreneurs and having an entrepreneurial spirit, you're looking at ways to try to come up with a different revenue stream. And real estate is one of the best ways to do that. So I get approached by a lot of people looking to start a real estate investment portfolio. So say you want to buy and hold properties and rent them out and become a landlord. Or if you want to buy properties, fix them up, and then sell them again for a higher amount, like which we call house flipping. I've seen a lot of self-employed borrowers do that too. So there are different ways and different programs you could use for those benefits as well.
Now, is down payment assistance offered with those programs? Or because you're looking to make it a profession, it works a little bit different?
Well, buying investment property is different. You may not be able to take advantage of grants like someone who is going to be living in the house as a first-time home buyer. But there are other programs you could use that could help leverage your income a little bit better. Like there's a loan program called a DSCR, which is a debt service coverage ratio loan. And these are very popular. You see a lot of TikToks, a lot of Instagram reels and things like that that talk about it in short form. And I could do that here. Basically, a DSCR loan takes the cash flow that you're looking to generate from that property that you're buying and uses that to qualify you for the loan. So we're not using your personal income for it. And what's cool about that is if you're buying a house from an investor that has a tenant in the house already that's paying the mortgage or paying their rent, which covers the mortgage, you can use that to qualify for the house and not have to go into your personal finances to do it.
Awesome. So what you're saying, there's a lot of creative ways that
Absolutely.
you can actually get into real estate investing if you chose to. There's also different resources available if you want to buy your primary home. But the main thing is to reach out to you to find out what they can do. Chris, tell them how they can reach you.
Couldn't have said it better myself. All right, so yes, if you're looking to buy a house in any form, whether it's for yourself to live in, for a parent to live in, second home, for vacation, looking for investment property like we just talked about, we can help you at Movement, do all those things, and then some. The best way to reach me would be to call. My number is local. I'm from Richmond. I've been Richmond born and bred, without born, but bred in Richmond. I've been here my whole life. I'm local. I'm able to help you identify the best way to buy whatever you're looking to do. I can be reached here at 804-267-0542. You can reach me online at my website, which is www.makingmoveswithchris.com. And Chris is spelled CHRIS. And then also you can shoot me an email. That's chris.watson@movement.com.
So we making moves with Chris.
Absolutely. Absolutely. Hey, you're buying a house, you're making a move.
Right. Well, literally.
Mm-hmm. Yeah.
Hopefully out of the zip code you're in into another zip code.
That's right.
Yeah.
That's right.
So, wow. So let me ask you this. So we talked about grant funds, and we said with the self-employed individual, you could still leverage that.
Yeah.
What kind of loan programs, if someone is looking to purchase a primary residence? I know we talked about it on a investor side, but what programs work best, or you've seen to work best with down payment assistance?
The cool thing about loans that work best is it all depends on the person. I always say that everyone has a different fingerprint.
Mm-hmm.
And every snowflake is different. You never see the same two snowflakes. And the same thing comes with people and their finances. I've never had two separate clients that had the same exact portfolio, same exact.
I want you to repeat that again. And the reason why I say this is that when I spent years as a loan officer, I would always get this call. But my friend, we work at the same job, make the same amount of money. Why could they get that and I can't?
Oh, gosh. Yeah, I've had that phone call a bunch of times as well. Yeah, no two financial profiles are the same. Everyone's unique. So when I see you and I look at you at a case-by-case basis, I come up with the best program that's going to suit you and your needs, which may be different. I always say there's a big four when it comes to different programs that we use. Mm-hmm. There's a conventional loan, which is the most popular. It has a wide variety of different options to suit your needs. There's an FHA loan, which is similar. It's very popular as well. This is a federally backed program by HUD, government-backed program. There's USDA, which is similar as well, but it's for rural distinctions. And we're in Virginia, all right? We're in Richmond, Virginia right now. But if you go 20 minutes in any one direction, you're going to be in rural territory.
Yeah.
And you're likely to be in USDA territory and take advantage of these awesome loans because they have 100% financing, which is no down payment. And then the other is a VA loan. And those are reserved for veterans, people who have served in the military. And that's a zero down payment or 100% financing loan as well. But again, those are the big four: conventional, FHA, USDA, and VA. And each one of those has a grant that you can attach to it to either help with down payment for the conventional and FHA loan or with the closing costs for the USDA and VA loan that has no down payment required.
Okay.
And again, I will fit you with either one of those programs depending on your case-by-case scenario.
Okay. Now, can you? I know we talked about grant funds. We talked about. We haven't talked about gift funds, nor have we talked about seller-paid closing costs.
All right.
So, I guess I'm all about assuming that people don't know what certain things are. So, if you could, for a moment, break down what are gift funds in the eye of a lender, and then what are seller-paid closing costs in the eye of the lender, and what are closing costs?
Just in general.
Yes.
Okay. All right, I'll start with gift funds.
Okay.
Gift funds are just exactly what they sound like. Someone is giving you a gift, not a loan, but a gift that will help you cover the cost needed up front to handle the transaction that you're about to do, which is buying your house. You can use gift funds when you're buying your primary residence. So basically, if you have a very close friend that can be verified as a friend, or a family member, which is a lot easier to verify, they can give you a gift to handle your down payment or those closing costs that you mentioned. It's pretty much as simple as that. Someone gives you money, they sign a gift letter that says that this is a bona fide gift and not a loan, and then they provide documentation that proves that the money came from them and it existed in their possession prior to the start of this transaction. All right, so that's gift funds.
Okay.
When it comes to the other aspect of this, seller paid closing costs. First, we define what closing costs are. For lending, closing costs are the cost of doing the transaction. So there are a lot of different aspects that go into the transaction from the start to the finish. You have to order an appraisal to get the value of the house, and that's a closing cost. The lender, me, I will require a few things to be done on your behalf to get you ready for the transaction to take place, which is we pull your credit, we send your information to a processor, we send it to an underwriter, and those people have to get paid. So as a lender, we have to keep the lights on, pay some bills, so there may be a charge for that, an origination fee that covers all those aspects. Then we've got your deed that you're going to receive when you buy your house. When the house is deeded to you, it has to be recorded in a courthouse in the jurisdiction that you live in. There's a recording fee for that. Usually there is an attorney or a title company that prepares the documents for you that you need to sign at your closing. There's a settlement fee for that. And then there's also title insurance. So, and then you pay taxes. It's just like buying anything at the store. There's a tax assigned to whatever you buy. When there's a change of hands of any type of good or service, then you pay taxes typically. So you pay taxes, and those things are wrapped into what's called your closing costs. They're typically 3 to 4% of the purchase price of the house that you're buying. All right, so you mentioned seller paid closing costs. Now, when you buy a house, you can negotiate through your last guest, Tamara Taylor. She can go about negotiating, having the seller pay the closing costs for you, so that you don't have to pay them yourself. And that is one, what I like to call house hack, so that you can not have as much paid out of pocket on your behalf when you go to buy a house. So there are ways to still do this. There's a misconception when it comes to buying a house that it requires a ton of money up front. I've heard as much as 20% of the purchase price that you buy, which is crazy. You know,
Well, that was in our parents' day.
oh, absolutely. Yeah,
Life
back
has
back when
changed.
houses cost
Yeah,
$10,000.
right. We were talking
Yeah,
about that last week.
yeah, yeah. 20% of a $10,000 house is not that much. Yeah, I've
Right.
exaggerated. I mean, you have to go way back in history to find a house that's $10,000.
Well, back in the
But
70s,
yeah, back in the 70s,
70s,
you could
80s,
buy a house
yeah.
$30,000, sure,
Yeah.
40,000, 50,000. Yeah, and then the down payment's not that heavy. But these same houses today are worth $300,000, $400,000. And 20% of that is a lot more.
Yeah,
So
absolutely.
I don't want people to think that or be, discouraged when they think about buying a house, saying that I have to make this huge down payment. You really don't have to. We talked about down payment assistance programs. I didn't go into a lot of detail with that, but there are ways that you can have the down payment either paid for you or a big chunk of it paid for you.
So we got into.
I never answered the question about seller pay closing costs.
Oh, yeah, yeah, yeah.
You can have it negotiated so that the seller pays your closing costs for you as part of the contract of you buying the house. And there are some real cool ways to make that happen for you so that you don't have to pay the extra 3 or 4% out of your pocket. And you can get a loan that covers your down payment, and boom, you don't have to come to the table with much of anything. So it's a good thing.
Yeah. So you heard it here. You got 2 weeks of this. You had Tamara with Exit Resource Realty, and she talked to you from the agent perspective. Now you got this week Mr. Chris Watson with Movement Mortgage. They gave it to you from the lender perspective. Now, I'm going to say this. If you are not in the market to buy a home because you feel like you don't know enough or you're afraid, you have two very great experts that then came on this line. They didn't just wake up yesterday and decided to get in this business. They done been in this business for some years, and they have seen some stuff and has had to overcome some stuff for their clients. So you're getting really good, strong people that will be able to help you through your journey or even determine whether now is the time to begin your journey. Chris, could you please let them know one more time for me before we wrap up? How can they reach you?
Oh, I'm easy to reach. You can call or text at 804-267-0542. Shoot me an email if you're more introverted. That's chris.watson@movement.com. Or you can go to my website, which is www.makingmoveswithchris.com.
All right, everyone. Thank you so much for joining in on this week's episode of Coach Talks. I am your host, Coach E. Again, if you have any questions that you would like for me to shoot out to Chris or to Tamara or just any one of our business and finance experts, shoot me an email at Coach Talks. That's with an S, show at gmail.com. Again, that's Coach Talks with an S, show at gmail.com. Also, make sure you are following and liking us on Facebook, please, so you can stay in the know. And we will always be putting out information regarding different things concerning business and financing. You don't want to miss it, and you don't want to miss any events that we may have coming up. We are thrilled that you are following us every week by listening to the show, and we are so grateful for you. This is Coach E again with Coach Talks. You all have a blessed one. Bye. Thank you.